When you think about this in terms of the longer term perspective, the government, whether or not the leadership in China really has a handle on this. I mean, they seem to be very, very slow to respond in the initial days, whether that's due to a lack of understanding or a fact that they just really didn't want to create, a mountain out of a molehill. You've got to wonder what implications this may have for this leadership down the line. I mean, how concerned are you about what we're seeing from Beijing?
Look, on that front, I would say not too concerned. I think what we've seen come out of China for some time now is a consolidation of power, and I don't think that's changing anytime soon. And I don't think the impact, certainly, that we've seen thus far, even whether it's from the riots in Hong Kong or whether it's from the virus on the mainland, I don't think we're seeing anything which jeopardises that power or which is likely to. So I think what we'd need to see is a significant hit to the Chinese economy, and we'd have to see GDP growth come down dramatically, and that creates social impacts before I think we'd see any questioning of power. But as I said, they've done a great job of consolidating that power, so I don't think there's any risk there.
David, what do you think the broader impact is going to be on the inflationary environment globally? We're, of course, talking about a slowdown when it comes to the global economy, a slowing China taking a hit as a result of the coronavirus. But we are seeing this impact on the supply chain. And of course, we did see those Chinese inflation numbers earlier today showing that January CPI was up by 5.4% and the strongest read or gain that we've seen since 2011. So could this be, I guess, a big factor when it comes to perhaps globally the inflation story starting to spike?
Yeah, look, I think that's a huge question again, Matt, because inflation is really what the world's been lacking for some time and what's going to drive central bank policy. But I don't think this is going to impact global inflation too much. In fact, it probably will go the other way. I think China is very different to the rest of the world, particularly given the impact on food prices on their inflation rate. And as was mentioned earlier, when you've got pork increasing by 100% in prices, that has a dramatic impact. You're not seeing that elsewhere in the world, so you're not seeing the inflation flow through, say, in the US or Europe that you are in China. I think one of the biggest problems is that if you have a look around most most global investment banks, they were really pricing in a pretty swift rebound in trade to support stronger economic numbers this year. And that data was expected to pick up, and we're expected to, if you like, validate some of the current valuations in markets. And 2020 was expected to be much better globally than 2019. But what you've had is this impact straight away at the start of the year. So that benefit from trade that was expected, and whether that was from US-China relations or whether that was from Brexit having some kind of short-term resolution, we're actually seeing the opposite to that with the coronavirus impacting trade, and we're going to see a slowdown. So I think what you're going to see is global growth much weaker than what people expect around the world this year, particularly in the first half of this year. And then as a result, I think you're going to see inflation well contained.